Amid surging credit card interest rates and rising delinquencies, a bill with bipartisan support would cap rates at 10%, about half the current average, for 5 years. The legislation would dramatically lower card rates, which average 21.5%. Even so, industry experts say the legislation could both help and hinder consumers. The bill's sponsors, Senators Bernie Sanders, Independent Vermont, and Josh Hawley, Republican Missouri, chose the 10% target for a reason. On the 2024 campaign trail, President Donald Trump vowed to cap card rates at around 10%, at least temporarily, while working Americans catch up. Now, the two senators want to hold the president to his pledge. Earn rewards on your spending, see the best credit cards. Working Americans are drowning in record credit card debt, while the biggest credit card issuers get richer and richer by hiking their interest rates to the moon, Hawley said in a statement. Capping credit card interest rates at 10%, just like President Trump campaigned on, is a simple way to provide meaningful relief to working people. History suggests the bill isn't likely to pass. Hawley proposed a more modest cap on card rates, 18%, in 2023. That measure died. Bank industry leaders predict Congress will not warm to this one. I know that they understand how problematic this is, and we think there would be strong resistance to it, said Lindsey Johnson, CEO of the Consumer Bankers Association. Industry leaders sent a letter to the two senators in opposition to the legislation. This bill would eliminate access to credit cards for millions of consumers and drive them to sources of credit which are far more costly and less regulated, they wrote. If Congress capped interest rates, would credit cards go away? Credit card companies take a risk when they extend credit to a consumer with shaky credit. Those customers often pay the highest rates. Card companies make money on the interest. The revenue also protects them against losses to consumers who don't pay the money back. Default rates on credit cards top 3%, the highest level since 2011, when the nation was emerging from the Great Recession. Defaults spell losses for card companies. If Congress capped rates at 10%, according to some industry observers, card companies would probably stop approving credit cards for anyone whose credit history is spotty or short. That might mean millions of lower-income, financially fragile Americans could no longer use credit cards, the analysts said. Young consumers, entering the workforce and trying to establish a credit history, might not have access to credit.